What is up, everybody? My name is Chino, where we discuss everything crypto. It has been an insane week for markets and specifically for crypto with the rise and fall of meme coins. Inflation data came out this week. There's been some new developments in the Coinbase versus SEC case, and there's been some bullish quant news. And we're going to dive into all of that in today's video. Before we get started, if you don't mind, drop a like and subscribe to my channel so you can stay updated and informed with everything crypto. So let's jump right into it. We're going to take a look at the Bitcoin chart. All right, so we're taking a look at the Bitcoin chart first, and we're going to see where it's heading today. And really for the past few days, we've been on a downward trajectory. And today was significant because we broke through this head and shoulders pattern right here, which is an indication for downwards momentum, downwards continuation. If you've watched my TikToks all the way back from April 12th, I've dropped a video and another video a few weeks ago saying that this move up to $30,000 looked like a bull trap to me, and that we were going to head back down and hopefully back down to my accumulation zone, which was that $25,200 level. The reason being is that this move that we got right here, let me take this head and shoulders off. So in the moment, this level right here was a short squeeze because we had gotten through a massive resistance at about 28,000, which let me see if I can. Right, so this level right here was a massive resistance at the time. Going back into the chart so we can see a little bit better what I'm talking about. So at the time, we were stuck under this resistance. We kept getting rejected. We finally broke through it. This was a short squeeze. Obviously, all of the sellers were shorting the market right here because of how massive this resistance is. Market makers see that. They see an opportunity. Boom. Short squeeze occurs, and then it comes right back down and turns over on itself. We've seen this multiple times. It actually happened right here. Short squeeze up, and then it just turns over on itself. But this has happened countless times in Bitcoin's history. This is the main reason why, and I figured that Bitcoin was coming back down. I'm saying that it's coming back down to the $25,200 level. That is my ideal pullback level. And now I have just added this $23,500 level, and I'll show you why in a second. I got to draw this head and shoulders back up here again. So we got the head and shoulders, our one shoulder, we got our head, and we got our shoulder that we just crashed through. All right. So now that we have this, how did I get this $23,000 level? My measured move off of this head and shoulders, it looks to be about those levels right there. From the break down, 23,500. And that is how I've gotten this accumulation zone. Mind you, I sound bearish right now, and yes, I am bearish short term, but I am still bullish on the long term, medium to long term of Bitcoin. I think Bitcoin is going to get up to $50,000 easily. And this move that we're getting right now is not weak. It's not weakness. It's not indicating that a structure is broken. This is a normal and healthy accumulation structure, and it makes for a better accumulation phase. All right, let's move on to the news. Taking a look at some economic data. Today, the PPI year over year came out, which is the PPI measures price change from the perspective of the seller. So PPI is thought to be a leading indicator of consumer inflation. Basically, all you need to know is if this number comes down, then that's assuming that when the inflation numbers come out, that is also going to come down. And the expected was 3.3%, and it came in better than expected at 3.2%. So this is bullish. Looking at the CPI is the inflation metric. This is the main inflation metric that everybody uses to determine, when they say, oh, inflation was at 5%. Inflation, the Fed, we want to get inflation down to 2%. This is the number that they're talking about. So it is a key way to measure changes in purchasing trends and inflation. That is what the CPI is. So this also came out this week, and the expected was 5%. It came in better than expected at 4.9%. And as you guys can see, inflation has been trending in the right direction. We peaked out at 9.1% last July, and you can see that we are trending now in the right direction, which is a good sign that we may not get an interest rate hike for the next FOMC meeting. Taking a look at the Fed tool, this is what economists are placing their bets on for rate hikes for the next FOMC meeting. So right now, economists are saying there's an 87.1% chance that there is a pause in the rate hikes for the June 14th FOMC meeting, and there's a 12.9% chance that we get a 25 basis point rate hike. These numbers are dependent on those numbers I just showed you, the CPI and the PPI and a bunch of other economic data. So these numbers always change, and there is one more CPI report coming out before this meeting, so these numbers can change, and we'll keep a close eye on it. Let's get into this Quant news. Quant confirmed to be working with the Bank of England on a CBDC, and this is Gilbert Verdian sitting with Tom Mutton, who's worked with the Bank of England. Who's Tom Mutton? This is Tom Mutton, Director, Central Bank Digital Currency Unit, Bank of England. And in this interview, Gilbert Verdian, this is what Tom Mutton said. Gilbert Verdian and Quant were important participants in Project Rosalind. What is Project Rosalind? Project Rosalind, developing prototypes for an application programming interface to distribute retail. Okay. Basically, what Project Rosalind is they're working to develop a CBDC. And Project Rosalind isn't some small project that some random group was like, okay, yeah, let's make a Project Rosalind. No. This is on the Bank of International Settlements website, and they're saying that they are partnering with the Bank of England to create this CBDC and this Project Rosalind. And who is the Bank of International Settlements, you may ask? Established in 1930, the Bank of International Settlements is owned by 63 central banks representing countries from around the world that together account for about 95% of world GDP. And Quant is at the forefront of developing a CBDC for them. Huge news for Quant, massively bullish. So while everybody in Europe and the UK is making moves, the United States is still stuck with the SEC and a lack of regulatory guidance. Coinbase sues the SEC after months of silence from the federal regulator. So this came out April 24th. This is an older article, but want to bring this up because today the SEC slammed by U.S. Chamber of Commerce for regulatory approach to cryptocurrencies and Coinbase filing. So backstory, the SEC has been going around and just suing everybody that has been related to crypto, and they went out and sued Coinbase. Coinbase has been asking for regulatory guidance for over, I think that it's 9 months now, and the SEC refuses to give guidance. So now Coinbase is suing the SEC for not giving proper guidance. And mind you, Coinbase is a publicly traded stock that had to go through the SEC for approval. So the fact that the SEC approved them, they're a public stock that American citizens are invested in, that the SEC is supposed to protect from investments. The SEC allows them to be a public stock, and they go ahead and sue them, which obviously is not good for the stock or good for the American citizens invested in that stock. It's all backwards. And the SEC has been doing bullshit like this for the past 2 years. Politicians and our government is starting to fight back with crypto and stand for crypto. Shout out to Meta Lawman for dropping this thread. I'm going to read through all of it because you guys need to understand what's going on here. The U.S. Chamber of Commerce just filed a brief in the Coinbase versus SEC case, calling out the SEC for acting unlawfully in the digital asset space. This is the U.S. Chamber of Commerce, not the Chamber of Digital Commerce. This is a big deal. Here's why. The U.S. Chamber is a highly influential organization representing companies in all industries across the U.S., not just crypto. The brief opens with, as it stands today, nobody knows for certain which digital assets, if any, are securities under federal law. Exactly. Number 3, the Chamber makes 3 arguments. 1, regulatory uncertainty is killing innovation in the U.S. 2, the SEC is destabilizing the digital assets regulatory environment. And 3, the SEC is violating constitutional due process and fair notice rights. And the topper is, the Chamber declares the SEC's actions are not just harmful policy, they are unlawful. The bottom line, the court will give these arguments advanced by the U.S. Chamber of Commerce serious attention, and The largest, most influential business organization in the United States has just declared its stands with crypto. This is massively bullish for crypto. And to all of the naysayers that are like, crypto's going to zero, blah, 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 blah. You guys are idiots. Fidelity is building trademarks for the metaverse for NFTs. JP Morgan is creating their own wallet. MasterCard, Visa, massive brand names are building in Web3 and are getting their foot in the door and are trying to get ahead of the space because they know exactly where it's heading. They see the potential of the technology, and so do we. And that's why I made this channel, actually. I want to go ahead, while we're on the whole Coinbase theme, this is a little off topic of that, but Coinbase says it screwed up PEPE coin coverage in its newsletter. So PEPE coin, everyone was asking, you know, PEPE, is it going to get listed on Coinbase? Blah, blah, blah. Coinbase released a statement saying that, talking about, I'm just going to read this. So Coinbase chief legal officer apologized for a company newsletter on the meme coin frenzy, suggesting that the Pepe the Frog meme, on which Red Hot Pepe token is based, had been used in racist ways on the internet. And now they're apologizing. We screwed up and we are sorry. Taking a look at the Pepe chart, Pepe is not doing too well. It's been on a steady decline, 72% down over the past few days. If you're investing in meme coins, be careful. Be very careful. Pepe, this is not financial advice. I'm just telling you what I'm doing. If Pepe gets down to $100 million market cap, I will jump into Pepe. And one of the recent TikToks I posted, I explained why I'll reinvest in Pepe if it gets to $100 million market cap. And it's really mostly because of the community that it's built. Kind of reminds me of Shiba. All right, that's all I got. Thank you for tuning in. If you like this video, if you found value in this video, please like, subscribe, share. I'll get better at that. And I also need to think of an intro, make an intro for the videos, make it look a little more legit. But anyway, thank you guys. You guys are awesome. Like and subscribe. Peace.